Okay, test. Can you hear me now? Okay. Sorry about the sound issue. I finally noticed that there are so many microphones, icons, and also no audio, no sound comments. Okay, now I notice it. So I hope I can hear now. I can see the mixer is moving, so I think it's fine right now. Let me just wait until it's okay, until I see reactions that it's okay from everybody. Yeah, sorry about the issue. Looks like it's, I had to reset the microphone setting, and then I hope it's okay now. All right, yes. Okay, great. Yeah, thank you for the feedback. Yeah, otherwise I would be just keep talking for 1 hour without any sounds. So you have to kind of recognize what I say by gestures and postures, which is kind of difficult to do. So, yeah, okay, let's start over. So, yeah. And this kind of sometimes it happens because when I record the video, I remember when I was started the live streams or before the live streams videos, I recorded videos, Ichimoku 5 series and moving average and price action. And when I recorded these videos, sometimes there's no audio when I hear back. And sometimes I notice it after I upload the videos on YouTube, which was kind of embarrassing. So sometimes I had to reset the microphone and redo the videos recording over again. So anyways, let's start again. Since we have new joiners here, why not start again? So thank you for joining, everyone. How are you? It's Kay. This is Saturday on the 18th September. I hope you're having a great weekend. So yeah, so let's start right now. So today, this is Saturday and market's not really moving. So usually on Saturdays, I talk about psychology or money management topic. And today, I was thinking to talk about the psychology topic based on some research at Harvard University. But instead of doing that, I will cover the questions and comments on YouTube because I got these many comments after I posted the vote from last week about the challenge that you're facing in terms of trades. So I decided to cover these comments and questions so that you can also learn from my answers. And also, if you have any questions in this live stream, please comment on the chat and I can cover these as much as possible. So, yeah, let's start the session now. Okay, so, all right, so let's see. So I have posted the vote from last week. And the question was, what is the biggest challenge at the moment to you? And I got these 581 votes. And one is trend capture, 22%, and entry timing is the most, 51%. Over 50% thinks it's entry timing is challenging. And also exit timing, 22%, and other 6%. And on other, I get 19 comments, lots of comments, and some of the questions are so valuable. So that's why I decided to talk about these questions and comments today. And this is on YouTube platform. And also I question the same on my Twitter. So here's my Twitter account. And in Twitter, the entry timing is the most and the same. 47.0%, about like 50%, and trend capture exit timing is 16.3 and 31.4, and other 4.7%. And I got 86 votes on Twitter. So let me cover some questions and comments on this, and let's discuss. Let's have some discussion and exchange thoughts and impressions and ideas about these comments and answers. So yeah, first let's cover this one, objective. Hold on, let me just in case take a memo here so that I know which one I answered and which one not. So hold on. Okay, so here is the comment from Objective. He says, lack of confidence, fear of loss, and getting trapped in the trade and unable to exit it, hoping situation will get better. So, sorry, the question is, once again, what is the biggest challenge at the moment for you? And he says the challenge is the lack of confidence and fear of loss and getting trapped in the trade and unable to exit it. So this is kind of the group session, like a session. So if you have the fear, let's say if you have the fear of lack of confidence and fear to loss, how would you advise is my question to you, everyone. How would you advise if you have someone who says lack of confidence and fear of loss is a challenge? And let me hear some answers on the chat. And in the meantime, let me just give some comments about this. And my direct answer will be to backtest. Backtesting can cover the confidence and also the fear of loss. Because, unless you backtest, you don't know your performance, and also you don't know overall stats in trades. And stats means you don't know how many consecutive wins can be expected by your strategy, and what's more, how many consecutive losses can be accepted, and also how many drawdown can be accepted. And if you don't know about these stats, then you might get frustrated by one single loss or two single loss, or even if you lose 3 times, you might get frustrated, because if you have the stats and if you know that it's a norm by backtesting, sometimes you lose twice, sometimes you lose 3 times, but that's a part of the process because according to backtest, it happens, and overall you can run profits. So if you know that, then on the real-time trades, even if you lose a couple of times, it doesn't really affect you, and because it's a part of the process, and you can continue on trading. And you don't lose confidence in that way. So I think that's one of the ways to avoid these lack of confidence and fear of loss by backtesting is one of my answers. I have actually other answers, but let me hear some other comments on the chat, because I want to discuss on these topics with everybody here in the community, because this is once again Saturday, markets closed. So I think this is a perfect timing to talk about these topics. So hold on, let me cover some comments now on the chat. All right, and once again, thank you for joining, everyone. Great to see you once again. Good to see you, everyone. All right, so let's see. All right, I get many comments. Thank you for your comments. Great. So let's see. Let me pick some comments here now. Let's see. All right, good to see you. Good to see you. Great to see you in this Saturday. Okay, Roberto says, I think the confidence coming from the risk control. That's true. Risk control, money management is the key. Because if you know the drawdown and also max drawdown per trade, then it can also contribute to reduce the lack of confidence. Yeah, and let's see. Melanie says, lack of confidence because you lost lot size too much per pip. Okay, so it's also about the money management. Maybe your lot sizing is too high. So yeah, that's understandable because I used to do that too. I was using high leverage and taking trades, and without knowing much about the lot sizing or position size or risk per trade, I was just going for the bigger size, and when I lose, I lost huge, and very short period I lose very big. And when I had these trades a couple of times, I lost confidence. So I think that's a good advice. You can decrease lot sizing and you can just do it like 0.01 lot sizing and take trades. So, and then you learn about the risk management. I think that's a good idea. Thank you for that. All right. Let's see. Velospain, yeah. When I had reached 50K subscribers, yeah, I will do something special for everyone. All right. The look says always beware of high impact news. Yeah, I think that's also a good point. Yes, always check news before you take trades, because sometimes news can affect the pairs and markets, and it actually moves up and down so heavily. So yeah, I think that's also a key to watch out. All right. Yeah, Velospain, yeah, Forex calculator is a great tool. You can use the calculator on the website and manage your positions. Okay, that's good. Okay, Radko finally says, in my view, the fear developed because of the following reasons: the no balance between leverage and capital, lack of control over emotion when market moved against you, lack risk control. Yeah, that's true. So the lack of control over emotion and risk is what can harm people, what can harm traders, and it can contribute to the lack of confidence. So yeah, please backtest and be confident on the backtesting, and then you can move it to the real charts. Okay, that's a good point. Okay, so let's move on to the next question. Let's see. Dr. MoBBC says, scanning, I feel like I could draw an ideal setup in my sleep and I can see them in the past data. However, how can I adequately find a setup as before it forming? I would say it's impossible. It's impossible to foresee the market in the future. So I recommend you to create scenarios before you take trades and monitor chart afterwards. And if the market goes backwards, then simply exit. If the market goes toward the direction, then simply follow through the trend directions. Yeah, as I mentioned on the Twitter before, we are not here to see the future market or predict the future, but we're more here to see the chart as of now from the past and create scenarios logically, objectively, and rationally. And always focus on what you can control, and never focus on what you cannot control is also the key. Okay, so let's see. The next one is, okay, this is Squirrel Dingar's cat. He says, balanced hedge ratios, volatility, and lot size are different for each pair. Anybody know how to create a basket position with equal weights on each pair? This can be resolved by using the calculator. So the one I'm using is this one. The one I'm using is position size calculator on myfxbook.com. So you can come to this website, myfxbook, and simply search position size, and this is my favorite. But or you can also use the Baby Pips also offers a similar calculator. So you can use either this one or the babypips.com for the calculator. Okay, so in terms of other questions on the chat, let me cover these later on, but let me start to cover these questions on the YouTube first. So, all right, so let's go to the next one. Okay, position size. Looks like position size related question or comments are pretty much. So yeah, here's another comment about the position size. I think you can also use the calculator. I usually go all in 100% of the account. Yeah, that's impossible. What if you lose? If you lose, then you lose everything in one single trade, and it's not really recommended. So yeah, I think you better manage the risk per trade and position size. Oh, sorry, hold on. Let me enlarge the comment like this so that you can see each comment in this way. Hold on, can I switch to the right? Yeah, I think that's good. Hold on, let me just adjust it like this so that you can see the whole screen. Okay, is this big enough? Okay, so let's go to the next comment. Okay, this entry timing when different time frames doesn't say the same thing. Okay, entry timing, I think it's also very big topic, entry timing. And Ashan says, I think exit timing is the most undeterred of all. Okay, entry and exit. So let me take a vote here. Let me take a vote in the community. Which one do you think is more important? It's more important. I will vote it on the chat right now, real time. So, okay, there you go. So you will see the votes soon. So the question is, which one do you think is more important? Entry timing or exit timing? Since we have, entry timing 51, exit timing 22, let me hear your comments and thoughts on the vote so that I can continue to talk about these today. Okay, so let's see. All right, and once again, thank you for joining, everyone. Great to see you, and thank you for the comments. It's quite interesting comments right now. So let's see. Let me cover the next one in the meantime. So let's see the next one here. Okay, so here is another one. He says, Jack Sparrow, he says, identifying low volatility or choppy market. Lower time frame in real time. And what about this one? Identifying lower volatility or choppy market. So if you are in the choppy market, then you know it by lower time frames. If you look at the 5-minute chart or 15-minute chart, and if it just goes up and down spiky, then it's a choppy market and you don't want to trade on that pair. And usually choppy market happens before after the news or these exotic pairs or minor pairs. Sometimes Swiss franc pairs act like this, or New Zealand pairs, and other minor pairs happen like this, choppy markets in lower time frames. And also, you know the choppy market potentially when the market is in the Kumo, in higher time frames. So if you see the market is in the Kumo in either daily chart or the forward chart, then most likely in the lower time frame, it becomes spiky, volatile. So that's also one way to avoid. So by using Ichimoku Kumo, you know when it's going to be choppy. And also according to the markets, the pair. And yeah, I recommend you to avoid taking trades in such a condition. Okay, so I think this is another nice question here. Okay, so here's another nice question from Daval. He says, what do you suggest? Trading stop loss in big trend or book profit with good RR and enter again in the big trend, or hold the trade and adding positions in the trending market. I'm so confused in this. What is the good according to you? Thank you. So, how would you answer to this question? How would you answer to this question? So, you have the trending market. You have the big trending market, and would you fix a profit with the good RR and then enter again along with the big trend, or you keep holding the trade and add more positions along the way? So it's either one of these. So which one would you do it? Or trading the stops. You hold the position and keep trading the stops as the market goes up and up that way. So I think I have the answer, but before that, let me hear your answer first in the comment, if you have it. So let's see. All right. Oh, with Win, thank you for joining on the Ichimoku community also. So yeah, please make sure to connect Discord to your YouTube account and get all the perks. Yeah, in there I wrote 3 books. One is Ichimoku Basic Master Book. Second is Ichimoku Basic Theories book, and third is Kyushu Legs. Kyushu Legs is not really well known in the world in English, but Kyushu Legs is another Ichimoku strategy. So you can also learn it on my Ichimoku community. So yeah, please check that and correct knowledge of Ichimoku. Okay, so once again, so from Daval, he says, what do you suggest? Trading stop losses in the big trend, or book profit with good RR and enter again in the big trend, or hold the trade and adding positions in the trending market? Which one would you do is the question. So okay, I start to see some comments. Okay, let's see. Let's see. Okay, Vinit says trading stop loss is a good option. Okay, trading stop losses. So you enter the buy. So let's say you enter buy as the market goes up. You enter buy and you keep holding that position as long as it goes this way. So that's one. Okay. Yeah, I think I do that too. Yeah, once I hold the position, I never exit if it goes up continuously. Because until the market stops trending up, we never know how far it goes up. So I don't use a fixed RL usually. I have the stop loss strategy and break even, but once I set the break even line, I just let the market run as much as it goes. And I don't really fix profit by the risk-reward ratio. So yeah, that's understandable. Okay. Yeah, surviving the long run. Yeah, surviving in the long run is a key. That's a key to success. Okay, Christopher says, set break even, trade profit until Kijun Sen goes flat on higher time frame. Okay, that's a good strategy too. Yeah, when Kijun Sen goes flat, then you can look for an exit timing. But until then, you can trail the profits along the way. Yeah, that's true. Minoru Endo says, never limit the profits. Exactly. Never limit the profits is the key. Yep. Yeah. So for myself, I do the third. I do the number 3. So once I buy here, I hold it, and the stop loss most likely is going to be here originally. Okay, here's the stop loss, and once the market goes up this way, then I move the stop loss to break even. So I physically move the stop loss, drag it above the position, so that the stop loss will be above the position like this here. And once I have it, I keep trading the profits as long as it goes. So, and along the way, once I set the break-even line, then I add the position. I can add more positions because technically, until you set the break-even line, you're risking some percentage. Usually I risk 2%. So I'm taking 2% here. So that means once the market reverses backwards and hit the stop loss, I lose 2% of my capital. But as long as the market goes up in this direction, I can trade the profits, and especially once I set the break-even line, this is break-even. So once I set the break-even line, then I don't risk anymore, because even if the market reverses backwards, I don't lose any money. So technically, after I set the break-even line, the game becomes either break-even or win game, which I like to play, which everybody likes to play, break-even or win game. So that's why break-even strategy is very important too. And once you set the break-even line, since you don't lose, that means you can take another 2% risk per trade. So after you set the break-even line, I look for an entry chance and I buy again. And as long as the market goes up, I try out the profits on these two positions like this. And once the market goes backwards in flat Kijun Sen and flat Kumo, then I will exit at some point. It's my strategy. And so when I draw the lines horizontally at the resistance levels, I kind of know when the market tends to retrace backwards, but that's just for my reference. Sometimes the market breaks the resistance and keeps going up and up along this way. And when it does, there's no reason to exit there. Even if the risk-reward ratio becomes like 1 to 10, I won't exit. I keep trading the profits and adding positions as long as I can, because this is a way to compound your positions, and you can run profits even faster and in time efficiency. So yeah, so that's I will answer this number 3. Hold the trade and adding positions in trending market. I would add after I set the break-even line. After break-even line set. Yeah. So that is my answer to this question. Okay, so yeah, let me answer to some of the comments here too on the chat. Roge says, I personally never trade profits. It's either hold or going down with the ship, but that's just me. Okay. Okay. Yeah, I wear my tie every day. On the live stream only. Of course, at home, I don't wear tie. But I wear tie in the live stream because this is my way of discipline. I feel disciplined, I feel serious on this live stream. That's why I wear tie now. Kel says, if the trading stop loss is incorrect, if it can stop loss before the market goes up again, so I still prefer manual stop losses. Yes, I also prefer manual stop losses. Yep. Okay, let's see. Johnny says, I think taking small profits with less risk is more important than taking big profit with higher risk. I think so. It's conservative, but technically it's better. Well, I will take less risk per trade, but my reward should be bigger than the risk. And that's for sure. Okay, let's see. Anne says, Kay, please do your exit when the lines flatten on the higher time frame, for me 4-hour chart, or in the time frame you are trading, for me 1-hour chart. I would exit when the market becomes flat in the trading market. So in that case, 1-hour chart. If you are following 1-hour chart, then once you see one become flat, then that's when you look for an exit, because afterwards the market might reverse backwards. Yeah, okay, so let's cover the next comment. So yeah, these are all very interesting comments, and that's why I decided to cover these on today's live stream. Okay, Adhank says, entry timing, I set my stop loss, but always get stopped out. Since I don't have 20K plus in my account, I only get 1 day trade per 5 days. I can't really trade effectively because I'm always worried about having more than 5 days trades in a week. Yeah, that's okay. I mean, if you only trade 1 day per week, that's okay too. If it's efficient, then I think it's totally fine. Yeah, for myself, I only screen chart 3 times, up to 5 times per day, but most likely 3 times I screen charts, and every screening times I only spend like 3 minutes or so. So yeah, efficiency is very important. Because, you know, any tradings, including Forex, or whether it's a Forex or stock market, indices, or even cryptos, you know, we don't get paid according to how long we check charts or how many trades we take. But we only get paid according to the fact that the market goes towards a direction. And in that way, if you can reduce the time of screening charts and make more profits, that's more effective. And technically, you can do that in the tradings, which you cannot do on other jobs. And I think that's the beauty about it. And that's why I say time efficiency is very important. Okay, Ali says, understanding the language of Ichimoku. Okay. Yeah, please continue to learn Ichimoku because Ichimoku is very important. 5 lines especially is important. Okay, Kale, yeah, thank you for joining this Ichimoku community. Great to see you here. Okay, so let's see. Okay, so let's see. So here is Damien, and he says about the confidence is my problem. So I have the start, and I know people that are successful with the start. I had the privilege to work with them in person, but I guess it's more of experience, things as a whole bigger picture. Yeah, so confidence cannot be built in 1 day. Like Rome is not built in 1 day, so confidence is not built in 1 day either. And to have confidence, like I mentioned before, please backtest and see the result of your performance. I recommend you to backtest at least 100 times per trade and see performance. I think that's very important. Okay, so let's go to the next one. Okay, so let's see. So here is another interesting question. Hold on, let me just take a memo here. Okay, so here is another question from Dirk Wanger. He says, I think what I figured out over the years is not the problem to find the right entrance. A lot of the traders, even the private ones, find nice entries. The point was, what makes a good trader in the end is how to manage a position. The first question is what I trade, the breakout, movement, or the trend. And for each gives different strategies. There are the most problems, and most traders know where to open a trade but don't know how to manage the open positions in the right way. Only my 5 cents. Okay, I think that's a good comment. Yeah, this is very important because as he mentions, the market is different, whether it's trending, ranging, retracing, squeezing, all different markets. So first, you need to be able to identify whether the market is trending, ranging, or squeezing, or retracing. So I do so by using Ichimoku and price action, and if you're using it, if you use the moving average, of course you can use it. And if you use other indicators and tools, of course you can use it, because the strategy will be different. So my KTS trading strategy is focused on a trend follow, because personally I like to trend follow, and that's why I built that strategy. But if you prefer to trade in a range market, or if you want to trade also in the range market as well as the trending market, then you have to have that strategy to enter the market by a range strategy. So I think that is important to be able to identify, first of all, whether the market is trending or ranging, and then you can use different strategies according to these different markets. And also, how to manage the position is also important, because especially in Forex, Forex pairs moves up and down every day, almost every week. It goes up and down, unlike stock markets or other markets. So you have to monitor charts and you have to manage positions, especially on these very fast-moving markets. And also, managing position means risk management and lot sizing and stop loss, break even, and how to trade the stop losses along the way. And this is also important because, like I mentioned before, the risk management will be the key to success. So I think the top will be psychology management, and second important is risk management, and the least will be the strategy, entry and exit timings. Because entry exits are purely based on the indicators, and I think it's pretty simple if you can identify it. It's very simple, but it's a psychology that stops you sometimes, that makes you some second thoughts, and also it's a risk management that can harm you in your account balance. So so position management is very important, especially these lot sizing and stop loss strategies is important. When I was a newbie, I never knew about the position size. I never knew about the stop loss. I didn't really care. I knew about the stop loss. I knew the word itself, but I didn't really care because in my mind, when I was a newbie, if the market goes towards my direction, then why do I have to study about the stop loss? And that's why I didn't really study about it. So once I hold the position buy, for example, I keep the position as long as the market goes up and down. And once the market reverses backwards, and once I see the drawdown to getting bigger and bigger, objectively, then I just exit there without any stop losses, without any resistance support levels. And that was a huge mistake because when I traded the gold back in 2015, I believe, the market, after, I think that was because of Trump tweet, the market shoot it down all the way, and I lost the account in one day. I lost 10,000 in one day, and that was a huge moment when I really became serious about the risk management. So that was an expensive lesson, but I think this is something that we go through. All the traders go through this. And from then, I started to study about risk management, stop loss, and how to manage these positions. So yeah, and so the key is to, once again, becomes to a non-losing trader. And break-even trader is already very great. But if you can be a profitable trader, then you want to master the money management, in my opinion. Hold on, I think the room is kind of getting dark, so let me increase the brightness. Okay, there you go. Okay, so Albert says being consistent. Consistency is also very important. Whether you win or especially if you lose, still you have to be consistent on tradings. Okay, Ash says, can you tell me any broker application in which I can trade in English? I think there are many brokers you can trade in English in the world. Okay, let's see. Yeah, I think that's it. Entry and exit, okay? So, all right, so now let me come back to some comments and let me close the vote and the poll. Okay, so looks like according to the poll, it says entry timing 60% and exit timing 39%. Okay, so looks like entry timing is more important in your opinion. Okay, so I guess if you want to refine the entry timings, so I mean, if you think that entry timings is more important, that means I think the psychology is that you're struggling the fact that the market goes backwards after you enter the trade. I think that's what it is, and that's why entry timing is more important. So if you think the entry timing is more important, then my advice is, first of all, trend follow, right? Always capture the trend direction and enter towards that direction is one of the keys. And then if you want to really precise entry, then you want to find the entry edge by using tools and indicators and price action. So among these, I think price action is the most important. So you can do the price action trades and look for an entry edge by price action and lines only, first of all. Because for myself, I use Ichimoku and I use other tools and indicators. So for myself, my main philosophy or my main tool to use is a price action. I use price action strategy, and then for supportive purpose, I use Ichimoku and other indicators. So I think that's important to remember. Okay, so yeah, looks like we have many comments. Thank you for joining, everyone. I think that was a very nice topic to cover today. So wow, I do many comments now. So let's see. The live stream is going to be ending in about a few minutes, but let me cover some other questions and comments here now. Let's see. Hanif says, hello, Kay. One question that when candle change of the forward chart, the conversion line and baseline immediately up or down? Not immediately. Not immediately. It may take some while for the Tenkan-sen or especially Kijun-sen to turn bearish, because if you know the calculation, Tenkan-sen takes 9 candles high and low, and Kijun-sen takes 26 high and low. So it may take a bit time for the reversal in that sense. Okay. Let's see. Laluk says, I fear no man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. Bruce Lee. Yeah, I agree. I totally agree with that. Yeah, on the Twitter, I also tweeted if you can master the basics more than anyone can do, then you can get success. Because Holy Grail is for those who lack confidence, but the confidence really comes when you master the basics. So step by step, we have to keep training ourselves and keep refining the strategies, and there's no shortcuts in that. Latest word says price action along with resistance support levels. Is it really work? I think so. It works. Support resistance levels. Yeah, for sure. Okay, so yeah, I guess I will be ending the live stream for now. So once again, thank you for joining everyone on this Saturday's live session. It was pretty fun to see comments and answer these comments and also check comments on the live streams. So this is my Saturday's live stream topic where I talk about psychology and money management. So hopefully you can join the next one and have a great weekend. So yeah, and after I finish the live stream, I will read these comments because I missed many comments on the chat. So I will make sure to read everything, and I will thank you to all the participations for today. So yeah, I will see you again, and until then, please stay healthy, stay safe, and stay gold. All right? And for those who are Ichimoku members, I will see you soon. So bye for now. またね. Thank you.